This is the Friday, March 29, 2019 version of the Market Plus segment. Joining us are Naomi Blohm, Roose, Darin Newsom, and Ted Seifried. Welcome back, everyone.
Thank you.
Delaney.
Okay, so we were just having a discussion. I'm just going to open it up for Market Plus because I think that the people watching or listening need to hear it too. Darin, you made the comment that during the main show, it appeared that lots of the commodity markets are essentially waiting on a deal with China. They're hinging on that to see some excitement in them.
And it's not just that they're hinging on it. I mean, Ted and Don and Naomi all made the point that, this market and this market and this market are all not just hinging, but relying on China coming in and saving them. All of our U.S. markets, all of our U.S. ag markets. And I just find it fascinating, and something that I've been visiting about here over the course of the winter, is that it's incredible that we are relying on our number one trade enemy now, our sworn enemy, to save all of our markets.
Right.
And that doesn't seem like a great plan to me, a great trade plan. It seems to possibly shift the stronger hand in this game over to China, if they now know that they are also going to be the savior of U.S. markets. That doesn't give us a lot of bargaining chips.
So I'm going to put it in the "it's so crazy it might just work" category, right? Because the trade deficit with China that we have with China is so huge that if they're going to try to close that, they have to buy something from us. And what would they prefer to buy is our agricultural products. So if a trade deal happens, and it is as great as what everybody's talking about, it could really be a game changer. I would say that soybeans have a dollar potential in either way, a dollar plus potential in either way, hinging on the trade deal. I would say that the funds haven't been as aggressive as sellers in the soybean market because they're worried that a trade deal comes through at any given moment and they get blown out of their short positions. So that's maybe kept soybeans from being under pressure. But here's the thing. If China is smart, and I believe they are, I think they realize that this fight's going to happen again in 2 or 3 years when they can't hold up to their IT and IP promises. And if they're going to do that, it would be smart of them to buy all of the soybeans from us and from Brazil, set up their strategic reserves to 50 million metric tons. So if this happens again, they can say, bah, no big deal. We've got it covered. That'll get us through enough time to really develop Africa, our relationship with South America, the Black Sea area, and we won't need the U.S. So this is a train wreck that could be a lot worse 2 or 3 years from now. But a trade deal with China having to buy under the disguise of, hey, we have to buy from you to close the trade gap, so we're going to buy all your soybeans. I think it really makes sense for them to do that.
A couple things. Number one, they're most likely never going to get serious about the IT or IP product.
Of course not. But and
number two, if they know that they hold the strong hand. I mean, it's like any other game. If you know you hold the strong hand, why would they actually be interested in closing the trade gap? It's not to their favor.
In order to get a trade deal, that's part of the thing.
But if they know that they're already winning this deal,
why bother?
Why bother even worrying about the trade deal?
Well,
and sticking to it if they make it.
$9 soybeans.
I wonder if it becomes down to a food thing. I really do. And here's something else to consider. I was curious to see that China essentially grows a quarter of the world's wheat, and they grow a quarter of the world's corn, but everything that they grow, they use. And so they haven't been importers of corn. They haven't been importers of wheat, but now just this past year, they've been importing wheat. And so they've told their farmers, we need you to grow soybeans this year. And then wasn't that exciting how lo and behold in October, they found 10 years worth of corn. Just when the world's supplies and the stocks-to-use ratio was supposed to be down the most it's ever been. Conveniently, they found all of this grain. And then they're still, though, slowly on the side buying corn from Ukraine. They're buying corn from us. They're buying wheat from other places in the world. And I just wonder if we get into this a little bit more, maybe we're going to really see their true cards, that they don't have what they say. And if they have a weather issue this summer, then I think you really see what they have. And then they do stockpile because they're going to be in trouble.
A lot of things could happen, but China around the world, because I've seen it in travel, they're really developing strategic alliance around the world, whether it's Africa, Ukraine.
Yes, they are.
I mean, and you can just see they come in and set up, and that's their goal. So they're not going to rely on the United States, I don't think so. And I'm not so sure they have the funds, and I'm not so sure they have the storage capabilities, which is why they found this corn. Out here, so I'm not so sure. So I think a lot of ifs and buts. But
I don't think
you make some great points, Don, and I think it's fascinating what some of the real results of this trade war have been. Is taking two historic enemies like Russia and China and bringing them together on the trade front, because now they're making trade deals.
They are.
And we're cut out. And those are two, as I said, historic enemies. That's what's fascinating as far as all this trade goes, is the fact that we are accomplishing something, and that is making lifelong enemies now partners.
Well, and when you look at the U.S., I mean, once we were the king of the soybeans, now we raise 34% of the world soybeans, and
yeah.
South America raises like 53,
half, yeah.
54%. So, we're still dominant, but we're losing some of our dominance in that pattern.
Darin, I find that interesting what you're saying, because it makes me think about Japan. I mean, we went to a world war with Japan, and then they are now our best trade customers or partners, one of our best trade partners. So I wonder, I really do think anything can happen. I mean, I think China wants our market open to them, right? And by us continuing to put tariffs on them, yes, it might not have a huge impact right now, but over time it certainly will.
They want our markets open to them on their
terms.
On their terms and in the amounts that they now choose. It's not where we're going to be one of their markets of first choice. We'll be, okay, we'll throw you a few here, but we're working into we're supporting the infrastructure of Brazil. All of this money that's being poured into northern Brazil infrastructure, northern Brazil ports. How much of that is coming from China? Where are they now looking?
Also.
Africa, yes. Where are they now looking instead of the United States?
Sure, right.
I mean, so yeah, it's fascinating what all this has done.
Mm-hmm.
But when we look at it, and we're talking about weather and some of these potential trade deals, today, do you think this is a good marketing opportunity after the prices we're sitting today? And I think you would have to tell yourself probably not.
Right.
All right, so that's what's happening big picture, but let's dial it back in here. Take a couple of questions that are focusing maybe more on the short term. We've got Quentin here at The Grain Grower on Twitter. He said, was our rally last week?
What's up, QB? We had a rally, 2 weeks ago, right? I think what he's asking is that our summer rally, or is that our, again, seasonally, you would expect things to find some footing here really quite soon. And a lot of times this report puts the lows in, as Don was saying, and then start to find some strength. And I think we'll see that happen again this year. I'm not as bullish on what I thought corn could do, and I've been getting less and less bullish as I've watched the ethanol problem really compound, and also how good the South American crops are, so I know we're going to have an issue with exports. But I still think we'll see a shot at $4 July corn. I think, $4.15 to $4.20 December corn. So I don't think that was it. To what Don just said, you look at these prices, is this our hedging opportunity? Is this our marketing opportunity? Probably not. I think we will have some better shots at it. But I think you have to temper your expectations for corn at this point.
Yeah, well, let me add on to that. As far as December corn futures, looking back at the past 4 years, 2 years, the December corn futures had their high the second week of July in correlation with 4th of July weather and USDA report. One of those years, it was the second week of June in correlation with the USDA report. Last year, the high was May, but that, of course, we all know was because of the tariffs. So seasonally, the historic perspective from the recent history with bigger supply themes, we still get one more hurrah higher into summer. It's either June or July historically and seasonally, but right when it gets really, all of a sudden it'll be bullish news, make sure you're locking in your sales, because just as soon as everybody starts getting really excited, that's of course the time to be making your sales. 425 is big resistance on December futures. 450 would be the ultimate hurdle to even try to climb through.
And do you think there will be specific indicators, either technically or fundamentally, that will say, yes, this is your spring/summer rally?
I think it's a combination of seasonals, that point where the market works higher, the funds probably theoretically will be long at that point. And then a lot of times we're overbought technically on a chart. And you have those three things going into a USDA report. The USDA report comes out, doesn't give us the bigger bullish news that we're hoping for. So boom, everything goes lower into fall harvest. So yeah, I think you'll have your opportunity, but don't be lazy and don't just not ignore it. Don't ignore it. You have to make sure that you're capitalizing on it.
And realistically, we need some kind of a catalyst. I mean, we don't know what it is yet. A lot of times you don't in the marketplace. But, there'll be a catalyst that comes about someplace. And it'll probably correlate with the ending stocks eventually have to get a little bit smaller. If they keep growing, it's dead in the water,
Yeah.
Darin, you have something different to say?
Oh, always. I mean, if we really want to talk about seasonality, if we look at the studies, you put your high, and if you look at a 12-month cycle on corn, Dees corn by itself, it puts its high in the first week that you start counting was on the first week of December. I mean, we can talk about summer rallies, but we've basically taken those out of the market over the last 5 or 6 years of any degree. And then so let's talk about ranges. Naomi mentioned 425 to 450. Well, Dees corn's moving sideways between about 315 and 450. We've been up above 4. Now it seems like it may want to go down. If it wants to go down, where's the low end? I mean, the other side of the range is about 315. So am I thinking that we're going to all of a sudden turn this thing around and it's going to get bullish and we're going to see a summer rally? No. Could we bump up 10, 15 cents? Yeah, I mean, we might get back within sight of $4, but if we're going to plant 94, 95 million acres, or if Don's right and this is the highest number we see, Dees corn's not going to go that far. We had our chance. It's going down.
Okay, so with that in mind, the acreage debate, we've got another good question here from Samwell in Brimfield, Illinois. He said, this is a bigger deal, good or bad, than just the corn versus soybeans debate. Hate to say it, but we need to lose approximately 8 million acres if we assume Mother Nature provides again this year, whether it's a flood or alternative crops eventually. What are your thoughts on that?
Yeah, we need to lose 8 million acres.
You know, I think that's right. And if you look at it over history, the government's helped us, either with set-aside programs in the 60s, storage programs in the 80s, or the PIC program that we had in the 80s. We don't have a system now to reduce the acres at all, and we're not going to this year. Right. So that is one stumbling block.
Unless it's prevent plant. That's the
Prevent
one thing I'm
plant
wondering.
Plants
Right.
possible.
Sue and I had that discussion last week. She said 4 million acres is what she thought we needed to see to change the story with prevent plant acres in some of those
But
states.
then when would that come out? Help me remember.
We just had 4 million acres less than we thought on this
Exactly.
report.
Right.
So we got them and it didn't react.
We need another 4. We need
Yeah.
Another 4.
Yeah. But when did the prevent plant acre, when does that come out? Help me remember. Is that when would they announce that?
No, that's way into the July report,
That's
actually.
when they
because
have
you
the
have
final.
to get way before, yeah.
Okay.
And we've even had updates in August. Remember, in '93,
an update,
we
yeah.
got an update in August.
Well, in '93,
So,
the yields were horrific. But I mean, granted,
well, we had
technology
like 6
has
million
changed.
plants.
But you won't actually see the acreage account for quote-unquote prevent plant until January. So why are we excited about it? I mean, you'll always have these on the outside talking about, oh, but what about
the farmers to have a better price?
But you're not going to get it from acres. Are you planning on? Are you telling your farmers, hold your marketing plan on the idea acres are going to get better?
No, there's a
That's
lot of
insane.
things, Darin.
That's insane.
Obviously.
Acres are irrelevant. That doesn't change anybody's marketing plan.
Okay, well, I'm going to
I'd
leave
say-
it on one more question because I thought this was a fun one. We've got Glenn in Bryan, Ohio. He said, the movie The
love
Good, the
Glenn.
Bad, and the Ugly was a classic. What 3 words, you only get 3, Darin, would you use to describe the current soybean market?
You want me to start?
I'll let you start,
All right.
but you get 3.
Underestimated, overpriced, and edamame.
What?
He's eating soybeans.
Does anybody else want to take that one?
But why edamame?
Because it's a fun word to say.
It is a fun
and it
word
has
to
to
say.
do with soybeans.
It does.
So I couldn't
Yes.
think. After the other 2, they perfectly describe soybeans. So come up with a third one that was fun. So
It was good.
Yeah.
It was good. All right, anybody else?
Does anybody else have one?
I got one. So Glenn and I share a love of music. So mine is a Black Sabbath song. I know. I listen to Black Sabbath too. I have a genre that I draw from. Never Say Die. That's mine. That's my 3 words for soybeans.
All right,
Very good.
I like it.
Yeah, I got nothing.
All right, Don?
I'm fine.
Okay. Guys, thank you so much. This has been a great panel discussion. Appreciate it.
Thank
Yeah.
you, Delaney.
Thank you.
Thanks for having us.
Join us again next week when we examine the efforts of ag colleges to attract underrepresented youth. Plus, Tom Fitzenmeyer sits at the market-to-market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.